right, legends. Hope you are all having a fantastic day. Yeah, the day before Christmas, New Year's, Christmas Eve. Okay, we have people that is dialing in for some technical analysis. Guys, I am going to take it a little bit slow over the next couple of days during the festive season. I mean, if it's not your cup of tea, or maybe it's not your religious cup of tea, if you know what I mean. Well, I'm still enjoying the festive vibes, the festive season, and I definitely want to spend it with some friends and family. So today I'm going to keep this live stream short, okay? And for now, the price is still ranging. And now the question is, as per the thumbnail, can we get the breakout of this range? Okay? This range, this boring range that Bitcoin is in, are we going to get the breakout or the breakout down? Okay, for the moment, what I can analyze, and we can jump into this structure in a moment, is that it is really difficult to count an impulsive structure to the downside, correction and continuation. It's also very difficult to count an impulsive structure to the upside, correction and continuation. So for now, the probabilities are higher that we are most likely going to continue this range. There's a couple of levels that I'm very interested in. Okay, there's some levels here to the downside that I'm very interested in, and there's a level here to the upside that I'm very interested in, and then there's some trading scenarios inside of this little range, okay, that I want to discuss. So let's get the technical analysis on the way. Welcome, legends. Good morning. You are always here for us. So nice of you. Well, indeed, well needed. Mr. Jack, welcome to the live stream. Appreciate you being here as well. Okay, as expected, guys, I did not expect a lot of people to join this live stream today. Even the video that I made on Monday got so little views. You can see people are kicking their shoes off. They're relaxing. They're taking a break from the chart. It's also something that I like to see. You know, go and reset your brain. Leave the charts alone. But if you're a die-hard trader, okay, you are very interested in what is potentially the next moves that can happen here on the price of Bitcoin. So I'm just going to go quickly through the scenarios, and we can look at the local structure that is forming in terms of, there's a very interesting level that I'm looking for a trading scenario. If I am in front of the charts, I will trade it. If I'm not, I'm happy to miss the trade and look for next opportunity. That's how I rock and roll. So let me just take this out the way over here. Die-hard trader. There's a die-hard trader here in the com section. Merry Christmas to you too. Welcome to the live stream. Good morning, Paz. I'm not going to try and pronounce all of these names. I might just trip over and fall on my face. Okay, smash up that like button if you haven't done so. Yes, let's do that. Okay, let's start the technical analysis. As you can see, for those of you that didn't watch my previous stream, I don't have a green screen anymore. Okay, it's all just natural background at the moment. And I am trying to juice it up with some LED lights and things like that. But nonetheless, we are here for the technical analysis, okay? And hopefully you've done some of your own technical analysis, and then you can see how that fits in with your trading plan. So on the higher time frame, let's just stick here to the 1 hour time frame. I'm not going to go particularly into the higher time frame right now, but let's look at this little range that we have been forming. This little range, very, very complex corrective structure. Okay. First scenario. We can't see your current price in your chart. Please correct it. Current price. Oh. Guys, I take some of the things away when I do trading because I don't care about price, okay? Sometimes, yes, that's actually a good point. We can't see your current price. So what I do when I trade, just maybe a tip, okay? If you want to follow the same thing, I actually delete the price action, the price numbers here on the side. I delete it, and I delete the dates. Because as a day trader, I don't need to know what the price is. I don't need to know what time it is. I don't even need to know whether we're in a bull or a bear market. As a day trader, I trade the structures. I use my trading strategy. I don't care what the price is. I don't care. Okay. Also don't care what day it is. Because it just removes the noise from my chart. So as you can see, I don't have the price action there because I forgot to switch it on after I did some trading. But let's see. Okay, price line is there. Labels, last price. There we go. There's the price on the screen for those of you that wanted to see the price. Let's go. First scenario that I want to go through is, let's maybe tackle this scenario. Okay, here is a scenario that I think could be very interesting. And that is the scenario where we claim this low. Okay, we have formed a three-wave structure in an A wave. We are forming a very extremely complex corrective structure inside of a B at the moment. Remember, you have A, you have B, and you go back up for C. Okay, in this scenario, you have formed a very complex W, whether you can put W there as well, but I just put it here at the end of the structure for simplicity's sake, so it makes sense. And then you have formed a WXY here to the upside to complete your X wave. So you have your W, you have your X, and now you can form an A, almost claims the low. Maybe it claims the low, maybe it doesn't. You go back up for B, and you fall down in a C, but you basically fall down in a three-wave structure. The minimum target for this scenario is the 0.9. So when you take a fib from the low to the high and you switch on your 0.9 Fibonacci, this is the minimum target for this scenario. Okay, so I'm very curious to see how price is going to react at this line. So again, guys, I need the structure to show me the way. If we bounce, we go back up and we have that larger trend. This is where I get this trend from. Okay, let me show you. Just wait for hopefully the price action loads up. So when I connect the all-time high to these little pivots, you can see we rejected here at the trend to perfection. Can you guys see there? Okay, rejected there at the trend. So maybe we're going to get some choppiness here by the trend. Okay, maybe we fall down here in an ABC, and then we finally break out to complete the C wave, okay, where you grab the liquidity above the highs. The B wave grabs the liquidity below the lows. So from a psychology perspective, it's actually a beautiful scenario. The minimum target is the 0.9. The maximum target is $75,122. So inside of the red box is, can like to be B flat targets. It can bounce at any of these levels. So I will have my alarms ready for those levels and I will make a trading decision. One-to-one extension is always the most interesting to me because you basically dip below, you grab the liquidity and you move to the upside. Okay. And then in an ABC flat, it's basically a flat. Okay. You expect most common the C to claim the high of A, and then you basically form a nice beautiful three-wave structure, and then this is a decision moment where price could continue to the downside. Right, so in this scenario is basically the scenario where we take this low, we move down into this zone, and then we break the trend. Okay, some high time frame candle closes above. Like to see a nice little retest and you play the momentum here to the upside. Make sure that you pay yourself because there's a lot of resistance weekly. I think if I switch on those levels, you will see. Let me just switch on those. I don't have it on this chart, but we have a lot of levels. Okay, I'll show you guys now on the Binance chart. Okay, we have weekly levels, daily levels, naked point of controls inside of this zone, and I mean it can get quite punchy, right? So let me take the scribble out the way. Now we have to do a little bit of, well, what could happen? Where could the C wave, where could this wave end? Where? Okay, the C wave over here. Well, I'm going to have to play a little bit of a guess game over here. So you take it from the low of A to the high of A to the low of, you see now this is the guessing game. Where? I don't know where price, but let's take it at the minimum target. Let's take it at the 0.9. Reverse it to the upside so we can see the levels properly. And I just make sure that I am on my normal template. Okay. Most common C wave targets in a flat is to at least claim the high. So the one-to-one extension is definitely where the C wave can reject. Second most common target is the 1.382, and then an extended C wave is all the way here by the 1.618, which is ironically very close to that high. So you could get that momentum here to the upside, grab the liquidity and fall down. Okay, so that is basically what I'm watching for inside of this potential structure that could play out. Then we have the triangle. Okay, and I'm sure you guys follow Andy as well, and I think Andy has also spoken about all of these scenarios. In this scenario, what makes this scenario very interesting is that this movement down at the moment should not claim C. Can you guys see C? Can you see the C? Okay, in this scenario, you should not claim this pivot. In this scenario, you do claim the pivot. This is why this low is so important to be protected. You can see you could still get the bounce. Okay, you make a lower high and you fall down in a C wave. So you can still take advantage. You can still have a nice little day trade, because there is a very interesting level that I'm keeping an eye on, and it's a daily level. Can you guys see? We have a nice little consolidation with a daily level. So if price continues here to the downside, I want to see how price is going to react at this daily level. And this could be E that's going to finish over here, where you basically formed an A, a B, a complex corrective structure in a C, a D, and then a E, which should not, it's not allowed to claim the low of C. Okay, so it either breaks out and continues, but I want to take advantage of that move, because it could also, remember that other scenario, it could be an A, a B, it rejects and it falls down for the C, but I want to take advantage of that move. So I know that there's a longing opportunity around the corner. Okay, so inside of this scenario, you then still expect, can you guys see, very similar to the ABC. The only difference is you don't claim this low. Okay, you formed a W, a big long ass X, which is basically a triangle. And then you go up for an A, a B, and a C to complete your Y wave. Same targets as the C wave that I've just shown you, where I will be looking for shorts. Also take profits from your long position if you are in a long. Can you guys see? Different corrective structures, but more or less the same result. The question is, are we going to bounce before we take the low, or are we going to create a flat and then bounce to the upside? But at least we have a little bit of clarity in terms of what could play out here. Okay, we're looking most probably for a bounce very soon, and to at least come and take out these highs. Okay, in the flat scenario, yes, you can claim the low before you take out the highs, where you form an A, B, C, and then you go up. So I don't know which scenario we're going to get, but I can pay attention to when price gets to my areas of interest, and then I can make a good trading decision with, amazing risk management. In this scenario, I think what's interesting about this scenario, if I just clean up the chart a little bit over here, but you can see to the upside. Let me just put the levels back, point of controls, weekly levels. You can see here to the upside above these highs, okay? Above these highs over here, we still have a weekly point of control. Okay, very powerful level inside of this zone. Just a little bit below, we have a naked point of control. We have another naked, so we have resistance in this zone. Okay, then it becomes empty. So for me, this is a no trading zone. I don't want to be in a trade inside of this zone. I will have an attempt in this zone. If price continues, let it go. Okay, because the next areas of resistance you can see is here close to the highs. Okay, where we have still many levels, another weekly point of control, a point of control, daily levels, lots of areas to pay attention to over here. But once the structure shows us the way, then I can go and measure, well, you take a fib from the low to the high to the wherever this low is going to be, maybe that's the low over there. Then I can see, well, where are those 1.236, the 1-to-1 extension. Okay, in this, by the way, guys, in a WXY scenario like I have over here, you ideally do not want to tap this 1.618. Okay, it's a very rare target for a WXY. Okay, so if I take my trend-based FIP from the low to the high to wherever this low is going to be made, but ideally you should not claim C, so let's just put it here in the middle somewhere. It is very rare for a Y wave, okay, to claim the 1.618. Most common, it rejects inside of this zone. That's the most common. Also the 1-to-1 extension, okay, and then rare targets which are very shallow is the 1.618. And by the way, that rejection over there was at the 0.618 in a WXY, because I think I spoke about it during my previous live stream where we had a WXY. It rejected at the 1.618 right over there after swinging the highs. And I told everyone, I said, there's a good chance it could roll over from where it rejected over here, because it is a minimum Y wave target. So if in this Y wave, okay, you don't really want to tap the 1.618. The minimum target is the 0.618. So in this scenario, you could get, okay, an ABC and it falls down without claiming the high. It could happen. That's why I'm going to pay attention to this level, depending on where that low is. Then I'll have a more accurate target. Right. Now, I want to throw a spanner in the works. I want to throw a little bit of a spanner here in the works. But maybe before I throw that spanner in the works, on the 4-hour time frame, okay, when you take a FIP from the all-time high to the low that we've created over here, it is very common, okay, if this is a W in a three-wave structure, this is your W. And now this WXY creates an X wave. And then you go down for an ABC to the downside. So you basically have a 3-3-3, a triple three-wave corrective structure. Okay, it is very common and it's preferred for this corrective structure to at least claim the 0.382, which is regarded as a minimum target. So the probabilities are higher that if we do get a move to the upside, we at least claim $98,000. So if that minimum target there by the 0.618 that I've showed you is down here where you don't claim the high, it is a rare structure. It's very rare to see a three-wave structure fall down with at least claiming a minimum target. So I would expect this Y wave to at least extend up until the 0.382 as a minimum requirement. It can go to the 50%, the 618 better. I mean, that's even better if it goes a little bit higher, especially if it claims this high. But then X wave not allowed, well, should preferably not claim the 0.7 for the bears. Because as soon as you go up and you claim the 0.7, then you decrease the probabilities that your Y, okay, will not claim the low, and then you continue up. Anyways, I don't want to get too far ahead. There's still a lot of price action that needs to play out before we can talk about scenarios so far in the future. But I just wanted to point out that there's a higher chance, regardless of whether this is a B, C, or whether this is a W, X, Y, there's a high chance to at least claim the 0.382, which is a minimum target. Okay. Now I want to throw that spanner in the works. Y wave, guys, they are very complex, and we are inside of a very complex corrective structure. Okay, this Y wave needs a three-wave structure. Okay, it has to be a three-wave structure. You cannot get a five-wave structure inside of a high Dewald and Legends. The C you are seeing no longer be C if you claim the C. Yes. So much alpha. Nico, welcome to the live stream, man. This Y wave, guys, can be an absolute nightmare to trade. Don't think it's going to be as easy. Okay, it could. I'm hoping it could. You form a E, you go ABC, and you at least tap the minimum target. That is the one that will make the most sense. Okay, that's the most common. But maybe there's some clever traders out there that's going to expect this scenario. You break the trend, you're going to go and claim this target as a minimum target. What if Okay, remember, you need a three-wave structure in Y. Right, guys, I wanted to tell you guys during the beginning of the stream, if my alarm goes off, I just quickly need to go and take something delicious off the stove. Okay, let me just go and do that. Sorry, guys. Let me put on the music. I'll be back. Okay, I'm back, guys. I am cooking some Christmas stuff, so I needed, my alarm went off. I needed to take something off the stove. It is what it is, right? It is what it is. Okay, so where was I? Okay, where can I have like to be? So if you need an ABC, so you basically need an ABC to complete a Y wave, or it can be a WXY, but let's not get into that. But you basically need a three-wave structure. Okay, let me put on the line. So I think what could be very interesting, okay, because this is what everyone is expecting from this triangle. This is what most people are expecting. Okay, you have a W, we're forming a triangle, you form your A, B, C, D, E, not allowed to claim the low. People are most probably going long here in the zone, you break out, they get excited, and they're like, okay, maybe I missed the trade, I'm going to play this retest over here, and you go up for the C wave. But remember, this is where it's going to get a little bit interesting. What if this happens? Okay, that can happen. Because in a three-wave structure, you can create a flat. This Y wave can create a flat. It can break out, fall down, claim, stop everyone out, and then continue to the upside in a three-wave structure. We don't know if it's going to do this or if it's going to do this, but it can create a flat. Now, this is an interesting scenario to keep in mind, but that's why I'm saying, guys, I'm looking just to, you know, that's why it's so important to take profits, because you never ever guaranteed, okay? If you're building a long position here, and let's say it doesn't claim the low, it breaks out successfully, pay yourself, take profits, because it can fall down and stop you out, and you're out the trade, okay? If this scenario had to play out, then obviously, I mean, this pivot does look beautiful for an SFP. It breaks out, okay, the fake out of the triangle. It fakes to the upside, it fakes to the downside, and then you get the move up that claims the liquidity above the highs. This is a little bit of a spanner that I wanted to throw into the mix over here. Because it's a three-wave structure, it's a Y wave, it can create a flat inside of a Y wave. Okay, but the probabilities are high. Whether you claim the lows over here or not, the probabilities are high that you're still going to come and claim these highs. Whether we do this, whether we do this, whether we do this, the probabilities are high that we are going to come and claim the highs over here. So it's about how do you position yourself? Where do you pull the trigger? Where can you get in with good risk management and pay yourself? Even if you're wrong, you get stopped out with profits. So guys, it's just not an easy range to trade at the moment. I'm not going to lie. It's not an easy range to trade. Okay. It's festive time. People are taking a break. New Year's are coming up. No wonder we are ranging. No wonder we're getting these complex corrective structures that, you know, it's difficult to make sense of these structures. Okay, so I just wanted to throw this little ABC in there. Let's put it in the folder. So that's definitely another scenario. Okay. And now let's go on to the 15-minute time frame. Let's look at this little structure. Okay, I think I've basically gone through all the scenarios that I see on the larger time frame. So for me, guys, the movement up, this movement up looks three-wavy. I cannot count a five-wave structure in this move up. This looks like a three-wave structure. And now this movement down also looks like a three-wave structure. Okay, so the probabilities are higher to at least continue the range. I don't know if we're going to see a breakout just as yet, guys. Okay, so let me just keep it simple here on the 15-minute time frame. If I take a fib from the low to the high of the structure, well, and I switch on my daily levels, okay, best area of confluence from a technical perspective this is what I highlighted. Can you guys remember in Monday's stream, I highlighted these little pivots and that little pivot. And I said it would be nice to come and grab that liquidity and get the bounce. And now we're back at this level, but we have now formed a higher low. So there's a chance that we could get some upwards momentum. So this is a very interesting zone where we're currently getting the bounce. If price decides to curl over and still continue to the downside, well, it's the 786 together with the daily level. Remember, I'm now looking at that triangle scenario where we do not claim the low. Can I get into a trade? Okay, this area looks very interesting to me for a potential long. This long was also very interesting, and now we got the back test, so we could potentially now bounce here to the upside. But what I would like to see, if price is going to front run this zone, if it's going to front run and continue here to the upside, well, you know, guys, I just have to go and rely on my trendy trend, okay, my little trendy trend. I want to see momentum being broken. So maybe it breaks out, maybe it rejects, but you know, I know what I'm looking for. I want to see some high time, or at least some 15-minute candle closes outside of the trend. Okay, you're targeting the high. Stop goes below the low. What would be nice in this scenario is that price breaks out and it comes back for a retest and it continues. Okay, because that's also a great load up zone. But I want to see a 5-way. I want to see a 1, 2, 3, 4, 5. That correction, that is the opportunity. Okay, we still have a naked point of control here above. So for me, if you attempt a long in this zone, or maybe you are already in a long from this zone over here, or with a back test, maybe your position is already protected, that high and this area becomes profit taking areas. Okay, because you could still form that A, B, C to the downside. Remember those scenarios that I've pointed out. Okay, and if you did not pay yourself and you get stopped out with a loss, well, that's your own fault as a trader. That's your own fault. You didn't do proper trade management. So basically, in a nutshell, guys, inside of the 15-minute time frame, I'm waiting for the break of trend, or I'm waiting for this zone over here. Maybe we reject here by the trend and we fall down. Okay, it will give you a better entry because you know exactly where to put your stop loss. You know exactly where to enter. If price moves in your favor, you can start de-risking, protecting your position. It breaks the trend, maybe you add or just leave the trade depending on where you entered. So this is basically how I plan to trade this little structure. Okay, but I'm very fully aware, because this structure to the downside looks more like a 3-wave structure, it's very difficult for me to count an impulsive structure. This does not look impulsive. I went and I spent some time even on the 1-minute time frame. There's some things that just don't make sense inside of the structure. You can force a 5-wave count, it's just not pretty. Okay, but this could be an A, you go up for a B, even a B flat, you can even, and you do a C to the downside. And that's what I'm saying, guys. That's why it's always so important to know where to take profits. And I think this is also one of the reasons a lot of people don't actually stay profitable, because they take the most beautiful trade, or they got in over here, it breaks out, okay? They want to take TP over here and they get stopped out. And they're like, fuck, I was in profits. Now I'm in a losing trade, or I just, you know, got stopped out of break even. Okay, or it continues, guys. This is E. E is in that triangle. E is in, and it continues. That's why you take profits and you leave some of the position open. It's about trade management at the end of the day. Okay. If no bounce, guys, if no bounce, let's say maybe it continues, I'm looking for a long. If no bounce and it continues to the downside, well, then I'm looking at those levels that I've just highlighted on the higher time frame. Okay. The flat targets to the downside. But, okay, Let's see how it does not look impulsive to the upside, and it does not look impulsive to the downside. So chances are we're just going to keep on ranging in the zone. Okay, whether we go down first then up, it looks like the range could continue for now. I think it would be very strange to get an absolute breakout during Christmas. Okay, during tomorrow, this week even. I mean, we've got a public holiday tomorrow. We've got a public holiday on Friday, the 26th, international public holidays. Okay, not just in my zone, it's international public holidays. It would be very strange to see this or this week. Would be very strange to see that. Right, and those are basically the scenarios. Let me go through some comments. Pumping now, yes, it's I don't know if you call that a pump. It's still in the range. Okay, depends on what, if you're looking here at the 1 minute time frame, yes, then it's absolutely flying here to the upside. Okay, depends on what time frame you are trading. Also, if you want to, I don't particularly like to trade these smaller time frames, but I mean, you can scalp depending on what strategy you use. If you want to catch the breakout before the breakout, well, there was your opportunity. Okay, there was your opportunity right over there. You play your trade. Okay, guys, this is 1 minute stuff. Okay, you aim for the highs. Stop goes below the low. If price already went up so high, I would start de-risking my position already. Okay, this becomes TP1, TP2, TP3. Simple as that. But like I said, guys, I don't trade such small time frames anymore. Okay. Right, but if you want to catch the breakout before the breakout, well, sometimes, you go into the smaller time frames and you can get into a position using your strategy. You can already get into a position. You can start de-risking yourself. You're already in the trade, so that when the larger time frame breaks out over here, okay, now you don't have to worry about this breakout. You don't have to worry. You've got nothing to worry about because you're already in a trade with good risk management. Okay. Do your course covers how to actually count the chart and also how to practice? Yes. My course is loaded with all the secret sauce, and I'm busy recording more modules that I'm including. So everything that you guys see here on the live streams plus more is inside of the course. And if it's not there, it will be there. Okay. Especially I have not finished the advanced Elliott wave sections yet, because those ones takes a lot of time. So I'm still busy recording those, but they will be available in the course very soon. Okay. What do you think about 5-hour time frame? I mean, you can trade any time frame you want, guys. My minimum time frame that I prefer to trade on is the 15-minute. My best time frame, my most profitable time frame, according to my data, is the 1-hour time frame. That's my most profitable time frame. Remember, the higher the time frame, the less noise. Okay, whether you use, I see even some people, they like to use like weird numbers, the 23-minute chart or the 7-minute chart, or they use the 35-minute chart. I don't care which time frame you trade. You can still apply your trading strategy and use your rules when you enter your trades. Okay, but the rule of thumb is the higher the time frame, the less you are going to trade, but the more accurate the analysis becomes. But it takes a lot of patience. And a lot of people don't have the patience to trade higher time frames. And this is why everyone is stuffing around on the 5-minute and 1-minute time frame, because they want to trade every day, not realizing that it's actually the worst time frame to trade if you're not experienced as a trader. Okay, unless you're practicing your trading strategies. The 1-minute, guys, even the 15-second chart is nice to practice your trading strategies on. Okay, let's go here onto the 5-second chart. Oof, that's terrible. Might have to do 15 seconds. Okay, that looks a little bit better. But if you want to practice your trading strategies, okay, maybe with $1 or $2, you use a small amount of money, you could go and practice your trading strategies here on the smaller time frames. Okay, but you use it to practice your trading strategies. What happens? Where do you put your stop loss? Where do you take profit? Like, you're just practicing your trades to get into the rhythm of the market. But then you place your actual trades on the larger time frames. Okay. This, guys, remember, the lower the time frame, the more noise inside of the chart. The higher the time frame, the less noise, but then you need patience. The smaller the time frame, the more noise, but then you don't have to be patient. But that's also where, unfortunately, a lot of people lose a lot of money, is in the smaller time frames, because there's so much noise. They're trying to trade the noise. Okay, let's see if this continues. 1, 2, 3, 4, 5. Okay, would be nice to get a little bit of a rejection. Maybe that's the 1, 2, 3, 4, 5 gets the rejection, and then it breaks out. Let's see how this plays out. Anyways, there's too much noise here on the smaller time frame, guys. You know, to do analysis, you have to be quick here on the smaller time frames. You need to know what you are doing. Okay, I prefer minimum 15-minute time frame. That is my preference. I would rather wait. For the chart to make sense before I place a trade. Thank you, Dewald. Absolute pleasure, man. High probability to claim the high before the low. I would say it's 50-50. It literally is 50-50. Okay, so let's just clean up the chart. Let's just take everything out the way. Switch off the levels. Okay, let's look at the structure again. So in summary, I think everything that I've now gone through. Okay, let's just look at the summary. I want to just take that fib here from the high to the low. Let's put this fib back over here from the high to the low. Okay. Now you all know the orange line is the 0.382. So let's zoom into the structure. So on the 1 hour time frame, these are basically your scenarios summarized. Okay. We have an A. We form a B flat minimum target. Let's just put it down below. Okay, let's say it claims the liquidity and you go up for a C. That's one scenario, but it claims the low first. Okay, in the flat targets that I've highlighted, you take your fib, your trend-based fib from the low to the high, and you get your flat targets here to the downside, where I will be looking for the first target, the 0.9. Second scenario is, and you can see in this scenario, you're basically claiming this low over here. Then there's another scenario where you have a W, a X in a triangle, and then you go up for an A, B, C. Okay. Then you have another scenario where you basically form also a W, a X that does not take the low, but it goes up for an A, B, C flat inside of a Y wave. Then there's another scenario. Okay. Just want to see. You have a W. You form a X. Yeah, I mean, this one is going to be absolutely hilarious, right? You basically formed a W. This is your X. And you form an A, B, C, D, E, and you fall down. So there is a scenario that does not claim the highs. But can you guys see how messy it is? You basically form a triangle over there in a Y wave. But now with all the scribble that I have here, I mean, it looks like an absolute mess. You can see that most scenarios points to the upside. Most of the scenarios, regardless of what happens here, most scenarios, whether you claim the low or not claim the low inside of this zone, states that we are most probably going to hit $98,000. And there's one scenario that points to the downside without taking the high. That scenario still needs a lot of patience, and that scenario still needs time to play out. So in this scenario where you form an A, B, C, D, E, you can see that it's not time yet. It can't fall from where it is right now. It's not time yet. It still needs to build another triangle. Now that will be a clue that you could fall down and claim the low. So if I have to put probabilities to it, I will say, well, most probabilities or most scenarios points to the upside. Whether you claim the low first or whether you don't, it points to the upside. So it's interesting to look for longs in the zone. Very interesting. But it's 50-50, guys. There's no, we're going to go up before we claim the lows, higher probability, because there's so many scenarios inside of this range. It's an extremely complex corrective structure. And because it's so complex, it opens up the door to so many scenarios. So that's why it's not easy to trade this range if you don't know what you are doing. Okay, most traders, what they will, especially if you're inexperienced, they will wait for price to leave the range. Let it leave the range, because once it leaves the range, that becomes very interesting. When it leaves the range, that becomes very interesting. Longs, shorts. So from a swing trading perspective, these two zones are the most interesting to me. So you could say, if you are a swing trader and you only play swing trades on the larger time frames, there's nothing for you to do inside of this range. You have to wait until it breaks the range. So it just depends on what trader you are. If you're a day trader, then you're looking for scalping opportunities inside of this range, 15-minute, 1-hour time frame. If you're a 4-hour, 8-hour, 12-hour scalper, swing trader, well, then there's nothing for you to do inside here. Okay. I think that's definitely something that a lot of new traders struggle with. What hat are you wearing? Are you a swing trader? Are you a day trader? Are you an investor? Do you just want to have spot bags? They can't accurately identify. They have an identity crisis. Okay? So they just do everything. They day trade, they scalp, they swing trade, they do everything all mixed up together. Same account does everything. Okay, you can't be consistent like that. You can't unless you have it organized in such a structured way. Like, this account is my spot trading account. This account is my swing trading account, and it has a specific strategy with specific rules. This account I use for day trading, and I trade the 15-minute and the 1-hour time frame. Like, you need to be able to identify clearly which hat you are using when you're doing your trades. Slow price action. Yeah, it is very boring, guys. It is so boring. Okay. I actually told the pro community this morning, I'm not trading. Okay. At the moment, I'm going to end this live stream and I'm going to go and spend it with some friends and family. I'm going to just relax, kick off my shoes. I'm going to relax a bit. I'm not going to trade the zone. Okay. Unless an alarm goes off and I see a clear trading opportunity, then I will trade. Because you need to be focused, but it's also that time of the year where I just want to not trade. Okay, it's that time of the year. I don't need to trade. I don't want to particularly trade this boring range. Mr. Rudy, welcome. Hello, charters. Have a great trading day and a festive season. Same to you, Rudy. Welcome to the live stream. Identity crisis. Yeah, I thought that was funny. Yeah, very slow price action. I agree, Stephen. Very slow price action. Okay, if you know what you're doing, you can scalp the range. I know Andy has been doing some 4-hour live streams every day. Absolute legend. I sent him a message this morning just saying, Andy, well done, man. Respect. I don't know how you do 4-hour live streams. Okay, it's insane, guys, to talk for 4 hours and analyze the price action. Well, then you have to jump. No, Andy is a great scalper. He doesn't enjoy it anymore, but he's a great scalper. Okay, you basically just trade the levels up and down, trade the levels. Yeah, on the 5-minute, 1-minute time frame. I used to do that, not anymore. It's not my cup of tea anymore, guys, scalping. Because the one thing I have realized is a lot of people want to scalp, but they're still struggling as traders. And from the research and the data, it states clear. It's not my opinion, guys. When you go and read the data that prop firms and exchanges release in terms of their successful traders, when you read that data, you quickly get a picture of what you should and what you should not be doing. Okay, according to the data, it's not my opinion. According to the data out there, scalpers struggle They really struggle to be consistently profitable. Swing traders make the most money, but you need patience for it. That's what the data is showing us. So if you're scalping the 5-minute time frame and the 1-minute time frame because you want to place a trade every single, 2 or 5 trades every single day, and you are not profitable, you need to ask yourself, and you have to have a serious conversation with yourself, that maybe, just maybe, you need to slow down and you need to go on to higher time frames. Okay. By all means, if you are a scalper, you're successful, you're making profits, well done. But you are in the minority. Okay, and there I go, preaching again, but I like to drop these nuggets, guys. It's interesting to read the data. There was a massive prop firm company that released data in terms of their successful traders. And what they classify as successful is a trader that's been trading for 6 months and has every single month consistently made profit. And then they release the stats and the data. And they classify, I think they classified a swing trade as having a trade open for more than 7 days and then taking profits. And they classified scalping as, basically more than 1 trade a day. That's scalping. And it's interesting to see the data that most scalpers liquidate their accounts. Most scalpers. Okay, 99% of scalpers liquidate their accounts. It's when you look at the data, well, you need to have some serious conversations with yourself. Especially if you're still struggling. If you're not struggling, then you must scalp. I know my brother is a phenomenal scalper. But he only scalps on the 1 minute and 30-second time frames. He doesn't even, for him, 5 minute is a high time frame. Okay, he scalps the 1 minute and he makes an insane amount of money scalping the 1 minute time frame. But he only trades like once a week or twice a week because he says it really takes a lot of energy and effort. And he goes to bed with a headache because you have to be super focused. You have to get in, get out, get in, get out. I traded with him not so long ago. He was here at my house and we traded together the 30-second or the 15-second time frame. We traded together. Fuck, I couldn't keep up. I literally could not keep up. Like, he's in and out, in and out, in and out. But you need an exchange with extreme low fees to do what he's doing. Okay, as soon as you have an exchange that has high fees, then the fees just eats up your profits and you end up trading for nothing. So yeah, I told him about Valto. He's very excited about Valto because he used to trade on Mexi and Mexi increased their fees, and he's been looking for an alternative. Okay, so links are down in the description, guys, if you want to support the channel. And Valto is here with 0.2% trading fees. Bluffin, this is where I do my larger trades, guys, on Bluffin. 15% cashback weeks. Still also you get 25% discount. BTCC, can trade commodities. If you want to join our Legends Pro community, link down in the description. Hi Dewald, do you use Market Cipher? No, I don't. I have used it. Guys, there's so many things I used in the past when I started learning the game, but I don't use Market Cipher. Okay, only swing trades. Well, Stephen, from a statistics perspective, if you stick to swing trades, you have a 99% higher probability to be successful in trading. That's what the data shows. Scary. Hi Dewald, welcome to the live stream, man. Okay, cool legends, that's unfortunately all I have time for today. I'm going to finish the food that I have on the stove, spend some time with friends and family. So if myself and Andy, I'm not sure what Andy's plans are, but if we're a little bit quiet more on YouTube, well, it's that time of the year where we just want to relax a little bit. I'm particularly not going to trade this range anymore. And just enjoy myself a little bit. I tried scalping once. It made me a zombie. Yeah, it takes a lot of... Guys, when my brother was here at my house and we were literally here on the 15-second time frame, okay? Guys, and it moves fast, okay? I'm still there doing my Elliott wave theory and looking at the structure down and looking at the structure up. He's just like, hey, did you long? Did you short? Okay, he shorts, he longs, he shorts. Like he's in, he's out, he's in, he's out the whole time. And I'm still trying to make sense of the structure. So yeah, he has a completely different trading strategy from a scalping perspective. But I can tell you now, you go to bed with a headache. Okay, you go to bed with a headache. And he analyzes fast. Like, he literally analyzes fast, and he's done it. He's taught himself to do it so well that he doesn't even need to use any indicators or boxes or lines or anything. He just looks at the price action. He's like, okay, it's gonna fall now, short. Okay, it's gonna bounce, take profits, and then that's how he does it. He's a machine. He's an absolute scalping machine. Anyways, legends, have yourselves an amazing day. Happy or festive, have yourselves a Merry Christmas. For those of you that do celebrate Christmas, enjoy the festive season, and I will see you all in the next one. Cheers for now.